it's one of these deals where if any of these things really do happen, if we lose the reserve status, if we see these types of horrible things with the banks and bail-ins and whatnot, it all makes sense in the blink of an eye. But until then, it's not about getting rich, because getting rich owning gold and silver, really what that means is that the dollar that we measure it against collapses. Because right now, gold is at or near, or has been all year, all-time highs against almost every currency on the planet. It's doing what it's supposed to do around the world. It's just the unjustifiable strength of the dollar that is blurring, and the manipulation of the silver market, where or they can dump 200 million ounces in.
Gold in the key London spot market also surged to record highs. It went up to $2,075 an ounce last Friday, gaining more than 28% in the last 12-month period. This was due to a shift in investor preference from U.S. assets to safe ones like bullion. AndySchectman advises owning gold and silver for protection, as the dollar's reserve status is at risk. Despite rising rates, he finds precious metals surge due to a trend favoring gold over government debt. For example, China may be keen to buy gold as a diversifier away from U.S. government debt. Similar for Russia, citizens in both countries view gold as a preferred wealth storage option, distrustful of their financial systems. As per Andy, the surge in the demand for precious metals is fueled by geopolitical changes like Saudi Arabia's swap deal with China, favoring local currencies over the dollar. The People's Bank of China and the Saudi Central Bank recently signed a local currency swap agreement worth 50 billion yuan, $6.93 billion, or 26 billion Saudi riyals, both banks said on Monday, as bilateral relations continued to gather momentum. Notably, Andy points out the UAE's refusal of dollars for oil, which is significant as the seventh largest oil producer, indicating a shift towards gold and silver due to reduced reliance on the dollar. Meanwhile, he observes India boosting silver acquisitions and India and China reducing their holdings of U.S. treasuries. Silverware fabricators' output is forecast to increase by 30% over the next decade. About 43% of the output growth is expected to occur in India. New numbers from the U.S. Treasury Department show China's holdings of Treasury securities have reached a low not witnessed in over 14 years. Now, we present the clips of AndySchectman's insights from his recent interview with Arcadia Economics. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
It was crazy. Certainly Friday was a very, very strong day for the metals, and a busy day for the market. And, I don't think any of us would have anticipated the way that it would have opened up Sunday night, up over $50 just like that, and silver up 50, 60 cents. And I'm expecting this to happen at some point, but when you saw the positioning on the commitment of traders report, the commercial banks have really loaded up on the short side as the managed money has driven the price up. And that's always an ominous sign. And that's what you're probably going to talk about here. Look, until the commercial banks are rendered as, or this market is rendered the way it should be, as really a inaccurate reflection of the real value of gold and silver, where the derivative is controlling the price rather than the other way around, I think it will be more of the same. However, the problem is with this whole thing is that, for a very long time, there hasn't been much in the way of any competition in terms of standing for delivery or real drive to buy precious metals. It's interesting that they've gone as high as they have in the face of rising real interest rates. But this is something that I've been talking about for a long time, with the de-dollarization and all of the countries that are simultaneously selling treasuries and buying gold, because it's somewhat of a recent phenomenon where entities view government debt as an asset in place of gold. It's kind of going the other way around. But what I'm really getting at is that I expect this to accelerate. And the reason I say that is all the stuff I've talked about like last week, we talked about Saudi Arabia signing a swap agreement with China. And that means that they trade in local currencies to get favorable rates and sidestep the SWIFT, sidestep the dollar. And Saudi Arabia, I've talked a lot about who has made admissions to doing everything from joining the BRICS, the Belt Road with all the other OPEC countries on the Belt Road, the Shanghai Cooperation Organization, the New Development Bank. But they told everyone in Davos that they would be open to taking other currencies for oil, open. Well, the United Arab Emirates, the day before, now, right now in the United Arab Emirates, they have a conference with 200 countries there represented on the United Nations summit for climate control, climate concerns, whatever, some woke thing that is in the UAE, and they have 200 countries there represented. And it's no coincidence that the day before, they publicly announced that they're no longer taking dollars for oil. They're the seventh largest oil producer in the world, who just alongside Saudi Arabia and Iran joined the BRICS. We are on an unsustainable path, and I think that is the reason that you're seeing China at the same time they're buying record amounts of gold, in fact, doubling what they, in fact, much more than they bought in 2022. I don't want to say double. I think it is double. Let me just look. It's almost exactly double, I believe.
And then you have India buying the silver.
Right. But at the same time, they're at a 14-year low in U.S. treasuries. They're dumping treasuries and they're buying tremendous amounts of gold. And so, and silver, and yeah, India importing another 60 million ounces and all of that stuff. So yeah, that's exactly what's happening. It's they're using the Western suppression of the markets to de-dollarize, and this will continue.
During the interview, AndySchectman highlighted market control challenges following global resistance, notably seen in India's substantial silver imports. Reserve Bank of India, RBI, on Friday, November 10th, issued a notification allowing qualified jewelers to import silver through India International Bullion Exchange in the same manner as gold imports. He predicts a shift toward a gold-backed or commodity-backed settlement currency, emphasizing blockchain's role in showcasing transparency. The potential for a gold-backed currency among BRICS nations doesn't require a unified fiscal policy or bond market. It provides stability with a universally recognized value pegged to gold. Gold has long been a safe haven asset, and its use as a backing for the BRICS currency could instill confidence among investors and member nations alike. Let's get back to the interview.
This is still a controlled market until it's not, and you have the rest of the world making it very difficult for them to continue to do this because, like India, importing 364 million ounces over the last year to where we are now, 60 million in October, I think. How long before they just run out of the ability to suppress it with real stuff or risk literally going out of business by being called on the carpet? And that's when the price of gold and silver and all the world's commodities moves to an exchange in a different part of the world, whether it be in Abu Dhabi or whether it be in Shanghai or whether it be in Moscow. It will not be in London and it will not be in the US, because we will be on an island isolated against the majority of the world and looked at as criminals for suppressing the markets for all of these years for our own gain in a very hypocritical way. That's the pushback that this BRICS conglomerate represents to me. But they do things very methodically. They don't do things shotgun like we do. When that switch flips, what we saw Sunday night will be pittance compared to what it will really look like if we see a global shift away from the dollar as a reserve currency. So yeah, I think that's kind of just a little bit of an appetizer of what you could expect to see, where gold and silver have been held down for so damn long. Who knows what their real value should be, but it should be much, much higher than it is right now. What they're talking about is potentially a settlement currency that would be pegged to commodities. And when gold was revalued as tier one, it certainly makes sense to use that. It depends on how they do it. I don't think they will make it a redeemable currency. I think it will be a currency that is pegged to a certain amount of gold, will be pegged to each currency unit, and they'll use blockchain to show the immutability of it. So I don't know how they're going to get to the conversion. And this is why it wasn't issued in August. You know, Jim Rickard said they're going to issue it in August, and people were bummed out at the meeting in South Africa. But what they did say was, well, in the meantime, let's trade in local currencies. Now look at all the deals that are being struck between Brazil and China, between Saudi Arabia and China, between Russia and India. All of these countries are trading in local currencies that he chops away little by little by little, logarithmic decay, at the settlement status of the dollar. And they tasked the finance ministers to go back to the drawing board and come back to the meeting in Russia next year with their findings on issuing a gold-backed or a currency-backed, commodity-backed, rather, settlement currency. The finance minister from Russia has been saying this for years. And that's the only way you'll get people to drink the Kool-Aid again. So the question is, how do you get local currencies to convert into a common currency? And I think that's what they're trying to figure out. And all of it, I believe, will be tied to gold and will be tied to blockchain technology to show the veracity of it. Because President de Gaulle from France proved that convertible currencies convert. And he would have drained all of it out of the Fed, out of the Treasury rather, if he had his choice. And that's why Nixon closed the gold window. So instead of making it redeemable, just show the immutability and the veracity of it on a blockchain and have it audited independently. And you have instant credibility. And what they need to figure out is how all of the countries that are coming together can either trade in their local currencies on what they have called Project M Bridge, as in money, which allows cross-border trading, sidestepping SWIFT in their local currencies, and how they could use a common settlement currency backed by gold. I don't know how they're going to do it. I don't know the math of it. I don't know the physics of it, but I do believe that is exactly what they're trying to figure out and to make work. And the bottom line is, maybe that's why all of these countries are loading up on gold, because you will have to pledge a certain amount of gold to the ledger to have access to the new settlement currency.
The recent surge in gold, coupled with the strategic moves by various nations, indicates a reevaluation of the traditional financial market. The momentum that propelled gold to a record high on Monday may fizzle in the short term due to uncertainty over the timing of U.S. monetary easing. Still, analysts said that broader geopolitical risks should boost fresh peaks. What are your thoughts on the evolving role of gold in the global financial system, and how might it impact individual investors? Share your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.